Felix here, and welcome to this, I was going to say pre-market live stream, that's because it's normally what I say, but it isn't, because, well, today it is Jimmy Carter's funeral. I don't know much about the man, but he's being remembered today, so the markets are closed for him, weirdly enough. Bond markets are open till 2 p.m. That gives us some clue. Futures markets are also open, which gives us quite a lot of clue. Plus, we have a bunch of things that I think is very important for you to understand to become an amazing investor, which is our goal here. So let me share my screen with you and share with you what we've got in store here for you. I want to walk you through the Fed minutes from yesterday, just very briefly, what they actually mean for you. It's really only sort of one thing in there that is important. Wall Street banks are warning us of an overreaction. They're saying the market shifted too far in one direction, and what that means, that's actually a good thing if they're right. Then we have the big recession indicator that was triggered yesterday, and mainstream media will pick that up in a couple of days. They're usually a bit slow to the party, but it doesn't mean what you think it means. So I want to explain that to you as well. And then I want to do a huge Q&A to answer your questions here. And you're very welcome to put them into the Q&A thing or just in the live chat, and I will do my utmost to get through them all. Does that sound good? Does that sound like a plan? If you are here and ready and awake, put a smiley in the chat. I think that'll do to show me that you're actually paying attention. Horrible president. And not many people seem to be saying particularly kind things about Jimmy Carter, although I think when people are dead, it is good to find something kind to say about them. I'm sure he was a lovely man somewhere, somehow. So let's jump straight into it then, shall we? This is the best summary that I could find of the FOMC minutes. And it puts it into very, very, very short things here. Questions here, Justin? Yeah, you can. There's also a Q&A thing at the top, which might make it a bit more organized. But wherever you want, just put them there. Okay, the smileys are here. You guys are awake. Brilliant. That's always a good thing to do. A very good thing to do is also just stand up and jump around. Seriously, that helps. I can't see it, unfortunately, but it helps. So what were they saying here? They're saying we are at or near a point at which it would be appropriate to slow the pace of easing. So they're saying we're still going to cut rates, but we're going to do it more slowly than in 2024. And the vast majority of participants, which is all the Fed Muppets, forecast it as appropriate to lower the target range in December. So they cut rates in December. A number of participants indicated that incorporated placeholder assumptions regarding potential trade and immigration policy changes into their projections. So you know what they're saying? They're saying, we think what Trump's going to do is going to drive inflation up through tariffs and tax cuts. So they could be really, really off on that if Trump's tariffs come in a little bit lower than expected, and if tax cuts are offset by Elon's spending cuts. If Elon gets rid of $2 trillion of spending out of the federal budget a year, then we're going to be in massive deflationary hell, by the way. Interest rates will go to zero tonight, maybe not tonight, but overnight. So they're also projecting lower GDP growth and a higher unemployment rate. So they're basically putting in pretty kind of negative, nasty assumptions here. And if you get lower taxes in the US, lower regulation, you might actually get higher GDP growth. So there's a lot of assumptions in there. And they're basically saying, we're just going to wait and sit it out. And what did I say to you in November and December? I said, I think the Fed's going to wait and see what Trump does. And then they're going to react to it because that's kind of their job. So this is sort of just a wait and hold approach. And I think the market's overreacted to it somewhat, thinking, well, we're not going to get any rate cuts. We're going to get rate cuts. The question is, are we going to get 2, 3, or 4, or 5? In 2025. I think it's not as dire as people are sort of making it out to be. Does that make some sense to you? Does that make some sense to you? If it makes some sense to you, put a number 1 in the chat here so that I can see it makes some sense to you, which is always useful, so that I know that what I'm talking about isn't complete rot. So this is the federal fund rates futures. The what? I know. It's weird, isn't it? You can trade the US federal interest rates with futures. I know, it's exciting, isn't it? If you really got no life, it's something you can do. And essentially what it's saying is that a lot of ones here. Brilliant. I like that. Thank you very much. 0.5 Shadow the Legend. That's also fine. It doesn't need to make 100% sense. I just tune a little bit more regularly, and over time it'll make a little bit more sense, and I'll try to be more clear as well. But by December this year, at the moment, we're looking at a 4% interest rate, which isn't terrible, right? It's not wonderful, but it isn't terrible. It's sort of 2 rate cuts. That's kind of what we're pricing in. I suspect we're going to get a little bit more than 2 rate cuts. And the easiest way to do that would be the government cuts the deficit, because that's really what the whole thing is about. You know, the whole story here is the market's down because US bond yields, so US interest rates in the market, and the traded markets are up. Why? Because we're worried about how much debt there is. If the government's issuing more and more debt, they have to pay more and more interest to attract people to buy that debt. Therefore, the interest rates goes up. So if they have less debt, if they issue less fresh debt, then the interest rates will go down. It's kind of a self-fulfilling cycle. JP needs to step down. I don't think he will. Carter's birthday, not quite his birthday, but yes, end of life day. Is that a day? Okay, so let's listen to our friends at Goldman Sachs. And I say friends, and I mean, you know what I mean, right? The buggers in Wall Street are saying the bond sell-off. This is a confusing phrase, right? Who's confused by bond prices versus bond yields? If that's you, put your hands up. Just put a hands emoji out there, or a thumbs up, or something like that in the chat, and show me that you are slightly confused by bond prices and bond yields, because, well, most of us are. I still am, and I've been doing this for like 20 years now. So you have bond prices, and you have the yield, and can't see that, can you? The yield is basically a fancy word for interest rate. Okay, I'm glad a few of you are brave enough to also say this is confusing. They work in opposite directions. And the way you can think about that is bond prices always start off at 100. So they're always worth 100, right? When they go down, say they go to 90, but eventually they will pay you back 100. So you've added a little bit of extra value that you're going to get back when the bond gets repaid. That's sort of it in a nutshell. So at the moment, yields or interest rates have gone up a lot. And that's simply, the simplest way of thinking about that is you got money, right? Money always wants to make what? More money. And money can either go to stocks or it can go to bonds. Now, if the interest rate on bonds goes up, so you pay a higher interest rate there, say you pay 5%, that's quite attractive. So then more of the money will go to bonds and a little bit less will go into the stock market. So money will flow from the stock market to the bond market because yields are high. And that's what's been happening here the last couple of weeks, really. John, thanks very much. It's very, very nicely summarized. So they're basically saying the markets have overreacted. The disinflation trends, so lower inflation, support a more dovish outlook. Strong data, but softer job records may ease the pressure on the interest rates. And the only reason that bond interest rates are high is because there is so much government debt out there, and there's a fairly good, decent chance that Elon might fix it, right? So they're basically saying, I think they've overreacted, buy the freaking dip. They're not quite saying that, but that's what they're implying, right? Now, what about this one here? Okay, I'm going to hit you with one more big data point, and then we'll go to some of your questions. So put your questions, like what are you struggling with, into the chat here. I'd love to see it, and literally put them into the chat. Maybe start with a couple of stars or something like that so that I can see them. Start your question with something like that, and then it'll stand out in the chat as I scroll back up, right? So this here is credit card debt. And what do you see? Well, you see that this December, the amount of credit card debt out there dropped very significantly, right? Very significantly. And you might be thinking that's a very good thing, right? The US consumer is getting more wealthy. They have paid off their credit card balances. They're finally seen that buying shit that they can't afford with a credit card that's going to charge them 29% a month isn't a good idea. We finally achieved something with our financial education here. I'd like to be an optimist. And I know we're making an impact because I get all the kind messages from thousands of you every week, and you know, a lot of you making a lot of money, which is brilliant, and you're teaching your children and everything else, which I love you for. But do you think that that's what's happening here? Do you think we've made such an impact that people have stopped spending on their credit cards here? Yes, no? Put it in the chat. I'm leaning towards the no. Generally speaking, the only reason people pay their credit cards off is that they think the world is about to end. As in, they're going to lose their job, or recession's going to hit, or something terrible is about to happen in the economy. That's really the only time that happens. And the last time we've seen that was 2020. It was COVID. Now, it did help that Papa Biden basically walked around, knocked on everybody's door and said, would you like a few $100 million? Here they are. No questions asked. Didn't quite happen like that, but more or less. That helped. But generally speaking, it's a bad thing when people pay off their credit card balances for the economy, which is another one of those Wall Street things, right? Higher unemployment is good. More consumer debt is good. Like, I mean, really, it's a really messed up world, isn't it? Really messed up world. Okay, most of you seem to be agreeing with me on the no thing. Yeah, I agree with you on that one as well. I think you're right. I think you're right. So this is a little bit of a fly in the ointment. But I think what I look at is you're getting a president in. Whether you like him or not, don't really care. But he is going to put in, he's going to lower taxes, right? He's going to reduce regulation, and he's going to be very business friendly. Right? So, very business friend. That's sort of my Chinglish here, which I'm sure is an offensive sentence in himself. Oh my God. And therefore, I think the economy will do very well, at least temporarily. The whole thing might be debt funded and all of that, possible. But in the short term, I think the economy will do very well. So I don't think this is the warning that mainstream media is going to make it out to be, the whole, like, you know, the world's about to end thing. So what's the bad news here? Is that helpful to understand that a little bit, by the way? Is that helpful? Put a smiley in the chat if that's helpful, and let me know. Now, what else will be helpful? What's your biggest struggle? What's your biggest struggle? Most of the time I ask people, what's your biggest struggle? And they say, I don't know what to buy. And who's who just said it here? Nico saying, struggling with patience. Wasn't Rigetti sound on hims and her, Palantir before it went up, and out before they went up? And now you're wondering, should I buy? Should I sell? Should I hold? Right? Or which is the classic thing, right? Where do we buy? Where do we sell? So you can do a couple of things, right? You can buy, you can hold, or you can sell. And if you don't have rules for those things, it's really confusing, it's stressful, it's not fun, and it discourages you from putting money into the market, which is the one place where you make more money, right? How much did the market go up last year? The S&P went up a whopping 24% last year. It's staggeringly wonderful, right? If you were fully invested, you'd be 24% richer, right? Okay. Loving all the smileys here. Guinea says, struggling to find stocks to identify and apply the breakout. Okay, that's a good problem, right? That's an easy thing to fix. Can we fix that for you? Yeah, we can fix that for you. Okay, the first thing you can do is watch the masterclass. And if you actually learn that and apply it, like many of you have already said, it actually has changed your life, like literally just the masterclass on its own, which is super, super cool. Like 20 minutes of your time and it's changing your life. Secondly, you might want to learn a little bit further. And I'm not saying you have to start with a masterclass, but I still learn stuff every week and every month. We have a WhatsApp group with all my investment mentors, and you have access to those, by the way, if you're in our communities. And it's tremendous because we've got guys in there who've done this for 50 years. I haven't done this for 50 years. I've done this for, I don't know, 15 or 20 years. So I can learn stuff. I mean, I have an idea and a trade or something new I'm looking at, and I'm like, what do you guys think? And then they give me their honest opinion. And two pairs of eyes are just better, especially when some of them are more experienced than me. So I think in life, that's kind of the shortcut. So check out the masterclass, the link's down there below. And then let's look at a final sort of bonus piece of information here from our friends at Doomberg and Misery. And Doomberg says, and this is literally just out just now, they're saying the top Federal Reserve officials, including El Presidente Jerome Powell, the magnificent in magnominus. They're pointing to an obscure price gorge as a reason to maintain confidence in the outlook. It is called market-based inflation. It's the latest in random ass manipulation that the Fed's getting up to. How do you define how much money to put into each trade? Diogo, that's a great question. Let's get back to that in a second. We have time today. Market's closed. We can look at the futures. We'll do that in a second. And then we have a little bit more time to chat through some stuff a bit more calmly here today, which hopefully we'll do rightly. There's another one here. How much can KMD app go up by in the short term? That's a brilliant question. You're basically asking, where do I get out, right? How much profits can I take? And that's a trade we put on yesterday. I mean, I did. I don't know whether you did. I'm not saying you should, but we put that on yesterday here. KMDA minus up 5%, which is $841. Just getting started, right? But back to this inflation thing here. It basically strips out a bunch of random things and it helps them to bring their inflation target, make it appear as if they're meeting it, right? So is that good? Yeah, we're basically, I mean, we're almost at 2%. That's 2%. We're at 2 point in a bit, right? So 2.3% or something like that. So we're almost there. What does that mean? It means they can cut interest rates because they've achieved their goal. So you're seeing that they're kind of creating a path for themselves to cut rates more and justify it. Trump's going to come in and he's going to be like, you lot better cut interest rates. Right? And I suspect they will. I think we're going to get three plus rate cuts, but either, in this year. And if we don't, we're going to get a lot more next year. So I think there is a lot of positivity out there that isn't really being reflected because we're having this little bit sort of pre-Trump coming in wobble here. So that's kind of the main stuff I want to walk through there. So shall we let's look at the charts quickly and then we look at your questions. So yesterday, when the Fed put out their FOMC minutes, it was here. It was at 2 p.m. there, where I'm putting, what happened to my line? May I please have a line? There we go. There she is. Yes. So that line here, let's make it purple. And now we have two lines. Okay. Delete that one. That was when the data came out. Actually, a minute after that, where I put it in. It should be here. So what was the impact on the market, on the NASDAQ? Nothing at all, right? Nobody cared. It was the most boring statement anybody had ever read in the history of reading FOMC minutes. By the way, if you suffer from insomnia, it's a great thing. Even better than that is the Beige Book, published about once a month by the Fed. Also, tremendous cure for insomnia. So the Fed is a bit irrelevant at this point. We're not that worried about interest rates anymore. We're really just worried about, is Trump going to add $10 trillion onto the debt pile by just cutting taxes and not cutting spending? I think that's the only real risk out there. And I suspect with Elon on board, that won't be happening. Okay. So second thing, futures. Futures are trading today. So right now, the S&P is down 0.2%, sort of neither here nor there. The NASDAQ is down 0.3%. That's also kind of neither here nor there. Staying importantly above the 50-day moving average line here, that yellow line there, that's important. There are even Tesla futures. Yes, they are. They're up 0.3%. They're traded in Europe. I know, it's probably the only useful thing Europe has ever thought of is Tesla futures. There are also Apple futures and Nvidia futures, and there's a bunch of stuff like that that you can look up. Is it a good idea? No, it is not. Honestly, if you want to look at stock charts on a day where the market is closed or on a Sunday, go for a walk, get a life. So no, don't bother. So let me leave that here. Now, one thing that I like to look at is actually inside TradeVision, which is the software that we built to give you the best quality data. You can see the popular stocks people are looking at, and I like looking at that because it gives me a pretty good idea of what everyone else is looking at. So what's up there? That's popular. Palantir, Tesla, Nvidia, so far, not surprised by that. Rigetti Computing, a little bit surprised by that. SoundHound, AMD, Fubo TV, I'm very surprised by that. Kamada, that was probably my fault, right? Yesterday. INQ and so on. It gives you a bit of an idea of, like, you know, what are the things people are looking at. So I quite like that. if you look at the sell-off, it is not a tremendous sell-off. It isn't like the worst sell-off we've ever had. Okay, quantum stocks, yeah, that's a bit of a kick in the nuts, isn't it? 45% down on Rigetti, and I'll put out a full video on quantum stocks today and what that really means. And what it really means is you need to know where you exit a trade or an investment before you set it up. That's really, really, really important, right? Afonso, you hate it when the market's closed. I know, me too. I'm like, what am I going to do with all this cash? Where am I going to invest it? So anyway, it gives us a nice day. I like, in a way, I like these days. It gives us a little bit of time for reflection. Are we doing the right thing? And we can look, a little bit more of your thoughts and your questions. And let me know if this is helpful, by the way. If any of this is helpful, like put it in the chat. Just say helpful. I'd appreciate that. But really what this is about is that when you enter the trade, first of all, you need to have a reason and a rule and a discipline when you buy it. If you bought it here after you watched our masterclass, right? Well done. Were there some other opportunities to buy it? Yeah, there was this one here, that candle there. And then there was another one. Not really, actually. No, that was really the only one. So it was either here or there. If you bought it after that, you were late to the party, which hopefully was all right. If you bought it up there, you were just a FOMO buyer. And that makes you human, by the way. Like, it's a completely normal thing to do because you haven't been taught how to invest, right? Nobody has an interest. We need to teach you how to invest out there, right? Governments don't want it because governments are funded by Wall Street. Do you know how much money Wall Street hands over to US politicians every year? It's billions in donations. So, to support the democratic good. Brown envelope shops is what I call it. What's your exit point for KMDA, says Kevin? It's my risk management. It's purely my risk management. I have never, ever would I cut short a trade because I think it's gone up enough, right? Because you don't know how much it's going to go up by. So what have I done? I've set a stop loss, and when it gets hit, it gets hit. And then I have a system whereby I keep moving it up so that my trades become risk-free trades, right? And I've showed you this one before, for example, FOA, we got into that in September, I think, and still in it. And yeah, we got in here, right, over here. And we've been shifting up our stop loss. Our stop loss is now sitting, I don't know, I think it's sitting somewhere here around $23 right now. And it's at $29. So you could have been up, we bought this at $9.27. Would you have sold? Maybe at 28, maybe when you came back down here to 19. It's random. If you're just picking these numbers, I wanted to sell it when it's 100% up. Now it's 200% up. It might go up 400%, it might go up 500%. Who knows? But I know when it closes out, I would have made money. So that's for me the important thing. Is don't cut short your winners. Let your winners run, but have that risk management in place. And your losers, get the F out quickly, very quickly, very quickly. Does it make a difference if the volume bar is green and red? Okay, a lot of you guys have been asking questions about that, and you found it very confusing what we were doing with volume bars. So now the volume colors match the candle colors. That seems to be generally easier for people to understand and comprehend. So very simple. Okay. How do we see the popular stock search? Go into TradeVision. And then you click on visualizer here on the right, and then you scroll down, and there it shows popular. So the top are yours, most recent ones, and then popular is down here, and here your watch list, whatever you want them to be. So, and that changes obviously all the freaking time. John, how do you spot the breakouts? Yeah, you got to basically use screeners. The good news is we're going to put one into TradeVision. I'm getting access to it today, I'm promised, by Jeff, my co-founder of TradeVision. And it'll allow us to see it on the charts. It'll allow us to scan for it across thousands of stocks. So we're gonna put that out there for you because I totally get that's a missing piece. It's a missing piece. What do you recommend for positions intended for long holds that are in the red, says Superflow? Depends very much on what it is, right? So I buy and hold good stocks for like the long run, you know, your Microsofts, your Metas, your Philip Morris, your, you know, that kind of stuff, like high quality companies. And I add to those every week. And mostly they're in the green. Now, does that mean I never ever exit them? No, it doesn't mean. I will still exit them if they fall foul of my rules, and that might be a 150-day moving average line or something like that. If I think they're really cocking it up, right? If they're really cocking it up, like Palantir, sorry, PayPal was really cocking it up, right? Management really did a moronic job there. So I don't think there is a stock out there that I say I will hold this forever till death do us part. I just don't think that's likely. Maybe Philip Morris, maybe, yeah, because it's quite unlikely that they're going to do something stupid. I mean, people will always be addicted to stuff, so that's probably a fairly good business to be in. But if they do something really stupid, like, I don't know, acquire something random, you know, then yeah, let's look it out. Small Space Living, thanks very much for that. He says, love TradeVision, been around since day one. It has grown a ton in a great way, helps me make more money for sure. I appreciate that. I'm going to take a little screenshot of that and share it with the development team because, you know, we normally only give them bugs. Have you considered an AI trading bot for TradeVision that be armed with your rules, says Phil? Yes. Now, the problem with that is that's a big SEC violation. It's a big no-no, basically, because it's financial advice. So you can put out bots, but you have to set the rules. So we could fill in the fields for you as a suggestion, but then we get into a very gray area. I don't like gray areas. I like to be very, very compliant with everything out there in terms of regulation. So I don't think we'll do that. I think what we can do instead is give you indicators that are really good. I think that helps. And we're working on the breakout indicator as we speak, and hopefully that'll be out in a week or so. And I think that'll be very useful. But you can't really expect technology to continuously beat the market. The algo funds, you know, they're like Wall Street guys, they're spending billions of dollars on setting up these algorithms, and they don't really beat the market. The people who beat the market are the traders with that good set of rules. And the only way I think you really understand that, okay, yeah, some foundations, some basics you can learn, like from a video like the masterclass I put down below, right? Here's the link again, felixprehn.org/get free. It's also in the chat here. Fox Gaming kindly posts it out there, and I'll pin it to the top of the chat as well. So definitely check that out. But ultimately, the market is it's a bit like poker. It's like a game of emotions. And the only way I think you can learn is ultimately by having to find yourself somebody to learn from. And you know, as I say, I've mentors. I give you access to them if you join one of our mentoring programs, and they all had mentors, and their mentors had mentors, and it goes back to, you know, Adam and Eve times. And it's just the way we learn, and we pass on knowledge and experience so that we don't have to experiment for years and screw up on a regular basis, right? Does that make sense? Does that kind of make sense as a way to learn? If that makes sense to you, put a thumbs up in the chat. I'd love to see it. Sam, what is a better trader for margin interest trading? I'm not really a big fan of using margin, my friend. Sam, I don't use it. I mean, I have a margin account because I trade options, so you need it, but I don't actually touch the margin. I just have cash in the account. So I'm not really a big fan of using margin. I think you're better off, say, learning something like options, which takes a little bit of time. I appreciate that. And that has inbuilt margin and leverage than actually using margin. I think it's a bad idea because the problem is it shakes you out at the wrong time, right? And we don't really want that. Okay, John, Katie, Tom, Phil, Barbara. Okay, lots of thumbs up here. Mark, Pee Wee, Jip, appreciate that. Jerry, you're super kind. He says, thanks for changing our lives. That's really the goal here. Casper saying, talk about stop losses in closing time. Okay, that's a concern people have a lot. And it's one of those things that scares people, right? Like RIGT yesterday, for example. where is it? Rigetti computing, as I keep calling it, to offend my Italian friends. I love the Italians. Italians are very nice people. So you opened here, so you closed the day at $18 and you woke up to $12.57. Right? Kick in the nuts, isn't it? So does that therefore mean stop losses don't? Because stop losses don't work in after hours. They just don't, right? Brokers don't execute them for some strange reason. I have no idea why, but they don't. Okay, so there's a couple of things here. First of all, this is relatively rare. Think about how many days has Rigetti been trading for? Can you see another gap like that? I can't. So since here, March 2022, we haven't had a gap like that. So that is, what's that, 800 days or something? So 1 in 800 days has that outcome. And when you trade, what you realize is that it's not about being right all the time. You can lose money when you're right. So you can you can do the right thing. Are we allowed to write? You can't see that anyway. Sorry about that. You can't see the screen. Okay, here's the dip again. And then I just showed you, if you go back here in time, 2 years for Rigetti, you won't find another gap like it, right? There just isn't one. Doesn't exist. That's how rare it is. And this is a pretty freaking volatile stock if you've ever seen one, right? It goes from like 0 to 20 something every other day. So even with volatile stocks like that, it doesn't actually happen very often. And you might be thinking, yeah, but it happened to me that one time. But it doesn't matter. And I tell you why. Okay, so me, right? My trading portfolio, each trade is small. So okay, there's an example, right? If each position is 10%, which would be quite large, right? And what if I lost like 10% on that trade? Right? A 10% loss, which is pretty significant, is what? It's 1% of the total portfolio, which is kind of irrelevant. So the point is, it's all about risk management. So yes, you will occasionally have this one trade that kicks you in the groin and you lose a little bit of money on it. But 99% of the time, we lose very small amounts of money on trades. And then the ones we make money on, we make big amounts of money. I mean, big, bushy-eyed amounts of money on, right? Look, let me show you the trades app open right now here, right? This is it's obviously just one portfolio, but look at this here, right? $7,000 up, $22,000, $2,500, $840, and then $700 and $57 are down. So you see the skew here, right? And we might close out of the IBIT thing, for example. That's pretty close to me getting out of it. In which case I'll lose $800. Does it matter? No, it doesn't, because I'm up at $32,000, right? So it's all about that. It's all about risk management. And I know that sounds terribly boring and dull, but that's how you make money. And every great trader in the world I've ever spoken to, and every great mentor I've ever had, they always said it's very simple. Make your losses small and make your wins big. and there are rules for that. There's a system for that. There's a structure for that, which of course we teach. So start with a masterclass and we get a little bit more in that. Felix, did you make TradeVision? Yes. So TradeVision is a software that we built and are building. I'm not writing the code, if that's what you're thinking. Not one of my skill sets. Although I used to work in a .com startup, which might help a little bit here. But no, I have a partner who's brilliant. He's one of my former students. He's called Jeff. Amazing guy. He used to be ex-Twitter as a developer. And we decided about 2 years ago now to build this, to basically give everybody access to the greatest data out there to make amazing trading and investment decisions. And that's really what it's all about. So we are building that with about a dozen people now full time. How do you know the winners will hit it big, says Nathan. Nathan, watch the masterclass and you'll know. And you literally, you won't just know it as in theory, you will actually know the actual rules. So Nathan, are you going to do that, Nathan? Anyone else is going to do that like Nathan is? Put a thumbs up in the chat if you're going to go away at the end of this video, which you leave it and you're going to go to felixfriends.org/get-free and watch that masterclass. Okay, Pilot here, that's a great question. So we have PayPal, right? And I have a position open on PayPal. And And when did we get in on this? The breakout was here even in July. I mean, actually, I think we opened a trade a little bit later here, somewhere in September, which was another opportunity. And stock's gone up a little bit and now it's gone sideways. Yeah, and stocks will do that. It might do that for months. So do I get out of it? No, I don't. It's above my trend line. It's a bullish setup still, and maybe it'll do nothing for a while. I think maybe earnings in early February here, 5th or 4th of February, might be the next catalyst for it. And if it goes down significantly, we'll get out of it. And if it goes sideways or goes up, we stay in it. We have to have some patience that these breakouts tend to take their time. Okay, let me show you again here. Back to FOA, right? That trade I got in here at $9.20, and then it did nothing from September basically to November. So September, October did nothing for 2 months, and then it went up, threefold. So patience is one of the hardest things as an investor. Doing nothing is what we mostly do. Okay, Guinea Pigs here is asking about quantum stocks. Okay, quantum stocks. Jensen Huang said it's going to take 20 years probably to have quantum computing out in commercial use. And all the quantum CEOs are coming out and going, no, we've got contracts with AWS and with the government and all this stuff. But look at the revenue they're bringing in. It's like $1 million here, it's $5 million there. They're like experimental early stage things. They're not really mass market commercial use cases. And that's what Jensen was referring to. That people are actually running their companies on quantum computers. Nobody's doing that. So yes, there is a little bit of revenue, but it's very, very little revenue. So we are still very, very early. Do you protect with a put at earnings, says Alan? Sometimes. Yes, sometimes. It can be a good thing to do occasionally. Although often, if that's what you're thinking, you might just want to exit the position. But yeah, it's a reasonable suggestion what you're putting out there. Is TradeVision and TradingView the same thing? Nope, I don't own TradingView. I don't. Be nice to own TradingView, but my intention is actually to build a better TradingView. And I think we can do that by making it more user-friendly. I don't think we need a million freaking indicators. We just need a couple that actually work. And I think that's a little bit the problem with TradingView. It's just like this overwhelming amount of random ass information, most of it not very useful. First name says, according to the masterclass, quantum stocks were above the 50-day average line, curving upwards, strong momentum, high volume. No, they weren't garbage, my friend. I have to disagree with you on that. I mean, look at Rigetti, right? It's a classic breakout, and it's a classic successful outcome. Let me show it to you. Where was the breakout? You watched the masterclass, you tell me. Well, I put a blue box here. The breakout entry point was about $2.70, right? And then it ran up to $21, and then it's now trading at $10, which would have triggered my exit. So is it not a success to go from $2.70 to $10? It's a 3x outcome. Now, it would have been nicer to exit at 20, but you can't see the future, so it doesn't always happen. You could have closed your position at $18.40 here because you dropped below your trend line, or at $17 if you're a bit more cautious and you paid attention, yeah. But if you didn't, you're still up 3 times. Do you beat yourself up? Do I beat myself up if I had made 3 times the money? No, I'm like, woohoo, right? Let's make some more money. So no, it completely works. Like it always works. So how do we avoid it next time? No, we don't. We just have to get in at the right moment. Don't get in up here because you're just FOMO buying. So don't get in too late. And there are rules for that. Watch the masterclass, you learn the rules. Rigetti will go back to 6. It might well do. Yeah, it might go to 2. It might go to 0. It's a fairly high chance it'll go to 0. It might also go back to 20 and 50 and 100 and 1,000 at some point. You don't know that at this point. But right now, all it's saying to you is, this is crazily risky right now, and you've got to do something about that. How do you handle those volume breakouts when the pullback can be significant? exit when the party ends. It's very simple. The party ended, but it told you it might end up here at 18:30. Your volume was collapsing as you were going sideways. That was a little bit of a maybe let's take some stuff off the table here. And then if you didn't see that signal, that's also okay. You know, then you woke up and it was at $12, and you would have been like, oh, let's get the heck out of this. Actually, your stop would have kicked you out at $12, maybe even at $11. But as I say, the gain from $2.70 to $10, $11, $12 is like 3 times, maybe 4 times. So that's a positive outcome. Right? That's all we ask for. So you're a bear now? No. I'm very bullish. But this particular chart with a gap as big as that is risk is fully on. So what do we do when risk is fully on? We reduce our risk. That's what I do. I'm not saying you have to do that. Tony says when you buy something and the move is big, right, initially, so pretty much every breakout ever does this. So you get the breakout up and you always get the dip and then you go up. So you have to set your stop loss far enough down that you don't get triggered. If you set it too tightly, you go out. And that's your kind of key risk point. And then you go up and then your risk kind of disappears. And that's just as part of it. So how do we deal with that? Lots of small positions, basically. I mean, not lots, but, you know, more than one. Rath, how do you decide when to buy shares versus leaps? How much do you know about options? Who here knows nothing about options? If you know nothing about options, put a 2 in the chat. Number 2, if you know nothing about options at all. Give me a pretty good idea. Anyone? No, nothing about options. Shadow Legend says me. Okay. Me. Okay. Most of you know nothing about options, and that makes you part of the normal 99% of the population. Do you need to learn options to make a lot of money in the market? No, you don't. I'm an options trader. I was lucky enough. I was taught it by some very good options traders, and there is some really cool stuff you can do with it, but it's not where I would start. It's a little bit more complex. It's not necessary. I would get to a place where you make very good money from your stocks. And once you enjoy that and you have the time and the inclination, then you see that almost everybody here is saying, I know nothing about options. Then you can learn with it. Like Christian says, good morning, there is an options course there. And yes, we do that. We teach people beginners options who know nothing. We teach people advanced options trading. We teach people everything. We've got people who are options market makers and have done that for decades. So you run massive billion-dollar hedge funds with options and so on, or run the options hedging for huge pension funds. And those are my mentors, and those are your mentors if you wish them to be. And you can teach you that, Benjamin. Absolutely. Yeah. Again, watch the masterclass. It'll give you a pretty good idea. If you want to have a chat with us about it, it gives you that option. You can apply there, and you can see if that's something you want to do. But there is a lot more complexity to it than stocks. Stocks is just much simpler. So, for example, okay, let me give you a real life example. I did a Tesla options trade yesterday, which might sort of give you a little bit of an idea what I'm talking about. So I was thinking yesterday to buy some Tesla options, a stock, and I thought I could buy some stock. I'm very bullish on them fundamentally, so I could buy the stock. Those are my options, right? I could buy the stock. That's the easy thing. So buy. I could buy an option, but the problem with options is they have prices too, and they don't just relate to the stock price. They relate to something called volatility. That's why we have this little thing up here, IV percent, 87. That goes from 0 to 100. So you basically have a price range of 0 to 100 on options. And this is a thing called IV percent. So 100 is expensive, and 0 is cheap. So where is it right now? It's at 87. So it's pretty freaking expensive. So I'm not buying options. And that's because I understand it on a deeper level. So what did I do? I sold some options instead. I'll show you that. I sold some put options. And these put options are going to pay me 13% by the end of the month. Or it gives me the option to buy the stock at $400, which is where it's trading. Right, trading slightly higher than that right now. So you can do this kind of cool stuff with it if you understand it. But as I say, it's not a starting point. It's a bit more advanced. Maybe it's somewhere you want to get to. Maybe you want to aspire to get there. Who here wants to become an amazing stock trader first and then take it to another level in master options? Anybody wants to do that? Put a smiley or a hand in the chat there. There's a little hand emoji, isn't there? Yeah, there it is. Here we go. Put one of those in the chat if that's something you want to do. And you don't have to, honestly. You don't have to make a lot of money. I'm from Switzerland. I'm wondering if TradeVision can work with Swissquote. Use Swissquote. Interesting. I know the broker well. We haven't integrated that yet. We're about to release a feature that allows you to put your trades in kind of manually. So that would work for a little while till we add every broker under the sun. So at the moment, I mean, you can still use TradeVision, obviously, but if you want to import your trades into TradeVision, okay, quite a lot of you want to learn that. Okay, that's very, very cool. So literally go onto the masterclass page and there is a button there that says apply now and have a chat with us and just find out more about it. We don't give you any pressure. We just have a chat with you about it if it's something that you might want to do. So yeah, here in TradeVision, you can import at the moment from these brokers, which are the most popular brokers in the world. We'll keep adding to that. Swissquote is pretty niche. It's pretty niche. I think it's a decent broker, but it's got pretty high fees. But it's pretty niche out there. So I can't promise you that we're going to get to that in the next week or so. Eventually, yeah. Barbara, you're super kind. Appreciate you tuning in. I'm liking all the hands here. I love that you guys want to learn, and honestly, it just puts you into that, very, very top end of people, because you're a group of people here who wants to strive higher and is willing to learn. And most people, I just want to be honest with you, most people don't want to learn. Most people just want the stock tip. That one little nugget that makes them an extra $1,000 tomorrow, because that's how far they're thinking. But you guys are in a different mindset where you realize, no, I actually need to spend some weeks, sit down and learn stuff so that I have a skill I can use for the rest of my life, so I can make more money for the rest of my life. That's far, far better than the one golden nugget, right, that I might give you. So that's really my intention here, and that's why I love this community. So I love you guys for tuning in. I appreciate that. At Chase, yeah, that's definitely on the list. Best way to start learning options, says Christian, who's one of my students, and he's doing very well. Christian, you're doing very well, aren't you? Start paper trading, absolutely. What's the advantage of importing your data? Well, it just shows you your trades. So for example, say our Tesla trade, we can see like where we bought on the chart, which is actually very useful, especially when you do a lot of positions. You can see exactly what each bid is. That works for stocks, that works for options. You can also see it for closed positions. And you can see your winners, you can see your losers. You can be like, oh, why did I lose $1,500 on that trade, right? XBI. And then you can look back at that and you can see, okay, I bought it here, I exited here, right? Should I not have exited a little sooner? I think I should have done. I should have exited here on the 14th. Why did I close it 5 days or 4 days too late? That can be a really, really good thing to do to make sure that in the future, your system is a little bit better. You can tighten your rules a little bit, right? So that's a very important thing to do, is to actually analyze what you're doing. And you know what this trade looks like in my broker? You can't even find the bloody thing. I don't even know. Let me show you. Yeah, transaction history. You have to, first of all, it's really hard to find. So you have to go back in time from whenever that was done. And then you have to do, it's really, brokers hide your past. You know why? They're worried it'll discourage you from trading. See, how do I even pull that up? I mean, I'm struggling with that, and I'm reasonably okay with IT. So this is January now, right? Now you got to find it in here. It's one of these things. This is how they show you this. Ridiculous, isn't it? Absolutely ridiculous. So that's why it's important to have, I think, some sort of visual tracker that shows you what you're doing, whether you're doing it right or wrong. Kevin, it's very kind of you. Appreciate you tuning in, and it's good. It's good you're learning from people. That's always a good thing to do. Cash says stock tips are nice, but if you don't know the fundamentals, it's a gamble. Precisely. And the problem is, you know, people always want that stock tip, right? They always want that. Well, you know, the one thing that's going to make me some money here. And let me just show you the futures right now. We're down 0.3%. Not really a big deal. The other thing we can track, even on a day like this, because the futures are open, is the VIX, the fear index, and that gives you a fair idea of where the market's heading. If the VIX goes up, the market tends to go down. So it's up 2% today, but it's at 18. It's not brilliant, but also isn't terrible. But yeah, stock tips. You know, you get a stock tip, and then you don't know what's happening, why you bought it. You don't know the reasons you're in it. So when something happens to it, you're the first to panic sell, which is usually not the greatest idea either. Trade Republic. Do we support Trade Republic yet? Let me see. No, not yet, but it's on the list. It's actually pretty high on the list. I know that one, so that's coming as well. Vanguard, yes, possibly. Also, Lands, what are they called? Lansdowne, whatever, the British one. We also want to add that. We basically, our goal is to add every broker out there, but you know, it takes a little bit of time to add them all. When you invest in your own trades and getting the visual, the feel they're learning us to be better. Yeah, I think that's always a good thing. How's your KMDA trading going? It's up about 5% or so, something like that, which is good. Saxo, yeah, we'll also add Saxo for you Europeans. Nomad, appreciate that. Steve, okay, thanks for the kind words there on TradeVision. If you guys want to get yourself a week's trial to that, this is our trading tool, our charting tool, our tracking tool, our portfolio visualizer tool, which also gives us buy and sell signals and so on. Wealth Simple, I think it's on the list, my friend, but it isn't quite there yet. Mobile app is it's looking quite cool. I've got it on my phone already, which might make you jealous. But we're still fine-tuning. I just want to make I want to make things really good when we put them out, rather than sort of putting out a half-baked thing. But let me show it to you if you can see that. Can you see this? Hang on. So there we go. So it's kind of getting there, but there's still a fair bit like we're tweaking. So, but it'll be cool to have it on the phone, and then gradually we'll add all the features to it. How's the buy list organized? I think by market cap. I think that's the idea. The bigger stocks are near the top. But you know, even on a day like yesterday, there were some you know, interesting ones like Halo here, for example, up 5%. There were some stocks yesterday that actually rallied. And then on the I think they are ranked by size, by market cap, and then also we have some of the hot stocks, which are sort of, you know, the popular ones out there, and they're mostly in a holding pattern right now. Nothing sort of very exciting going on there at the moment, which is just a reflection of where the market's at right now. Right, nice. Do you ever short the whole market? Yeah. If the whole market's collapsing, then we flip our script and we just trade it down, and we works exactly the same way. There is no difference between trading a market up and trading it down. Just a bit of a psychological challenge to it. It just feels a bit weird. It doesn't happen that often. But you only want to do that when really everything is going down. Like, I don't short the market when you're in a bull market. That would be really, really idiotic. I mean, just silly, expensive. You want to close the news column? Okay. Yeah, I've seen that suggestion before. I think that's something we could probably do. At least we could make it movable, right? Like we do, for example, with the RSI here, right? We can do this, right? So we can make it bigger or smaller. I think it'd be cool if we could, as you say, if we could shift these over. That would be a good thing to do. Yeah, I think that could be, I'll suggest that. We could slide that a little bit over. That might be a good thing to do. You can't short trade in Canada. Really, is that the communists in power? They're saying, you are not allowed to short the market. Is that what they're saying? Weird. I don't get the whole ban on shorting thing. It's the same. It's just selling. That's all it is. Whether you buy first and then sell, or whether you sell first and then buy, it's really the same thing. So it's a weird thing. Can you explain RSI and MRSI? Yes, sure. So there are two indicators, kind of momentum indicators. So RSI is, I'll write this out as well. So RSI is basically momentum. Why does it flicker? Momentum of the stock. My handwriting is glorious, isn't it? That's meant to be an M. Of the stock versus the stock. Okay. That's RSI. It's what most people use. MRSI, which stands for Mansfield, is sort of the people who, they used to publish books with charts. People used to have paper charts, literally. If you buy a book with the historic chart, and then every day you'd look in the newspaper and you draw in the chart of the day. This is what trading was like in the dark ages. That is also momentum of the same stock, of the stock. Handwriting, versus usually the S&P 500. That's what we've got going on there right now. So it tells you, are we outperforming compared to the broader market? And that's quite useful. That's quite useful. It tells you quite a lot. And that's why I prefer it. I prefer using MRSI versus because I can see the chart. I can see whether it's doing well compared to where it was last week, but I can't see if it's doing better than the market overall. So I generally prefer MRSI, which is why we have it down here. Guinea pigs, appreciate that. Yeah, a little bit more time and calmness today in that. Are quantum stocks still shortable? I think it's a very high risk move. I mean, you might make money with it as long as you have a tight risk management, but I think it's a risky move to do that. You don't know whether they're going to go up or down. Like, you just have no idea. There might be a bounce back. I think hedge funds are in this significantly, and that always means it's a very volatile thing. So you can only sell covered calls and TFSAs. Okay, yeah, tax accounts tend to have limits on what you can do with like options and stuff like that. And in a way, that's fair enough. They just want to say, hey, this is meant to be a low risk investment thing. That's why we gave you a tax break on it. So I kind of get that. But yeah, look, people think shorting is risky. It's exactly the same as buying stocks. It's just exactly the same thing. If you know what you're doing. If you don't, then yeah, you're gambling, right? And that's not a good place to be. So Steve, you used to graph your own charts, Steve. Okay, you're giving away your age there, my friend. Yeah, it's time consuming. But you know what? It made you really know the charts, right? And it made you not like look at 1,000 stocks. You just looked at your little universe. And was it better then? No, it's much easier now. I think it's much easier to make money nowadays. So there we are. I love you guys for watching and tuning in. This was quite a nice long session on a day where the market's closed. I appreciate you for your desire to learn. Everybody who promised to watch the masterclass, please do, because it'll actually help you. Today's a day where you have a little bit of time. So do that right now. felixfriends.org/get free. The link is down below in the description. And I look forward to